Hey everybody, great to be with the AIME community today. I'm always happy to be with my friend Dan Bayer. We're going to spend a little bit of time talking about why second liens today and how to grow your business in a market that continues to kind of shrink around us. And so we'll tell you a little bit about Newfi, a little bit about our products, but we also want to spend a lot of time talking about just this, how to grow your business and using these home equity products. A couple of these are unique to Newfi. And so happy to be with you today. My name is John Wise. I'm the EVP of National Production at Newfi. I've been in the mortgage business for 34 years and a little bit on the retail side, but mostly on the wholesale and correspondent side of the business, and most of my life in the non-agency business. So Dan, always happy to be with you, Dan. You want to give a quick introduction?
Sure thing, John. Like you said, always fun to just do these things with you and spend some time together, which is great. So for all of you watching and listening, thanks for taking a little bit of time out of your busy day today. My name is Dan Bayer. I've been in the mortgage space just like John. This is year 34, which, wow, at one point we were young kids. Look at those pictures, and now we're on the older side of it with a little gray in that beard. But what it's really fun to do is to talk about this non-agency space. John, my history a little bit. I've not been in the agency space ever. I've been in what we used to call Alt-A. I've done, the non-prime lending. Today we call it non-QM. It is the same stuff, the same loan program, the same guidelines, the same manually underwritten loans that has been going on when it hasn't been Fannie Freddie. You and I remember back in the day, before FICO score was around, and we were doing loans before LP and DU and automated underwriting engines. So we've seen a lot of things that have progressed. A little bit about Newfi, if I can just take a minute.
Yeah, absolutely.
For those of you who are not familiar with Newfi, please take a minute and familiarize yourself. I always talk, and in this audience, I'm going to assume that a lot of you have been in the business like John and I have a long time. And if anybody was in the business before the 2008 recession that we had, you may be familiar with the company Greenpoint Mortgage. Greenpoint was the dominant Alt-A lender in the 90s and the 2000s. And the reason I bring that up is our CEO, our boss, our friend Steve Abreu was the president of Greenpoint and is the current president of Newfi Lending. The majority of the senior leadership and a lot of the folks that are on the sales and operations side here at Newfi used to work for Greenpoint and used to work for Steve. The reason, John, I mention this is Alt-A or non-prime lending of the past is today's non-QM. We have value props and we have reasons and opportunity to help brokers and loan officers close more loans. And the main reason is experience. We have been doing these loans our entire career. We're owned by the third largest private equity firm in the world. We're owned by Apollo Global Management. That gives us a lot of opportunity and it gives us an advantage over some of our competitors.
Yeah.
Combine that, John, our turn times are very good. Our pricing, we are always staying sharp. We monitor that price on a consistent basis, and we are going to be at that top of the stack to help all of our broker partners and our loan officers close more loans.
Yeah, no, absolutely. No, one of the things that we hear all the time from loan officers, and what's important to loan officers is are you competing every day on price? Are you competing on product? And are you competing on service? And these are really foundations for us. And so if you look at and this proves out in a couple ways. One is we're super proud to be the NAM Service Partner of the Year for 2023. Very, very proud of that. We do NPS scoring internally, and what we're finding is that our NPS scoring is saying that we're providing world-class service. So we're really, if you're thinking about us, we've been a proud member of the AIME community now for a little less than a year. But so I assume most of you know us and have experienced some of these service levels. But It's something that we take a lot of pride in. But in addition to that, Dan mentioned our ownership structure. That ownership structure and our history in the non-agency business over Dan and I both 30 plus years in the mortgage business and focusing on non-agency. One of the things we talk about all the time is trying to help you figure out a way to say yes to more borrowers. And that's where that structure and that history really proves to be valuable. We are not focused on agency business. We are focused on non-agency business and second liens. And that additional focus is what gives us the ability to say yes to a lot of people, and we think be really, really good at what we do at all these pieces. So happy to be with you today. Yeah, Dan, anything you want to add
Yeah, I
before
was
we
just going
move
to
on?
say, given the landscape that we
Yeah.
have in this
Yep.
summer of 2024, not being dominantly focused on agency business, but finding solutions, giving creative solutions, helping our broker and our loan officer partners. How do you find another loan? How do we go mine more business? Where do we find those borrowers? So what we're going to talk about, John, which I'm really excited about, is twofold. It's we can help borrowers and help originators at the same time.
Yeah.
With second mortgages. That's really a fun, exciting time. So let's kind of dive into it a little.
Yeah, no, absolutely. So that's the question that I think a lot of people are asking. You're seeing second liens pop up all over the place, and so we're going to spend a little time talking about why now, and there's a lot of different ways to start this conversation. We're gonna give you a couple different reasons why we think this is important, but it all starts with the amazing amount of business that we did 2020 to 2023. We refied the world, and if you look at this chart. We have all these borrowers now locked into these low rates. This chart is, I love this chart. It's amazing. And what it basically reflects at a high level is that 89% of the mortgages that exist in the United States today have an interest rate below 6%. What are current agency rates today, Dan? Right, like 7 something, around 7% mark. So we know those borrowers aren't going anywhere anytime soon unless they have some major life event that causes them to walk away from the property. It's why real estate sales are down, and overall mortgage volume is down as well. It's one of the main reasons.
You mentioned the circle on this bar graph talks about 89%. So 9 out of 10 folks have a loan that has a rate sub 6. But you told me a stat that I have been using for months now, which is, what is the average note rate for all of these loans? On your bar graph here, John, what's the average? Tell people, this was fascinating because I was way off. What's the average note rate of these loans out there? What's the average note rate of an existing first mortgage right now?
I don't want to screw up the answer. Like, you're going to have to remind me so I don't screw it up. I forget what I told you.
So you told me it was 3.625. Yeah. And that was rounded to the closest eighth because that's the world we live in. So the average borrower today has a 3 5/8 first mortgage. And guess what? They're not going anywhere.
That's right. That's the whole point.
That's the reason we're having this conversation, is that subset.
That's right. Yep. And then, that's, like I said, there's a lot of different ways to start this conversation. This is one of them, but it's obviously super important because when you combine this with the next slide, which is the second reason why we're having this conversation, and you see the amount of home equity that's in the market today, this is fascinating. This is talking about $32 trillion of home equity in the U.S. housing market. So at the same time we refied the world, the real estate markets have continued to expand and grow. Matter of fact, I just saw an article this morning where they were talking about the fact that real estate values continued to climb to record levels, and this is all playing out. Matter of fact, this is probably a tad old. There was another article that came out, I think it was about a month ago, that said the tappable equity in the U.S. housing market was around 14 to 17 trillion dollars. So if you have all these borrowers that are locked in at these low rates, but you have $17 trillion of tappable equity, the question is, how do you get to the equity? How do you help these borrowers who need to tap the equity of their house get that equity and put it to use? That's the real question. And then Yeah. And then
One of the things, John, is
yeah.
I remember this phrase from a long time ago: dormant equity earns no interest. You can't do anything. I got this house. It's worth, I own 300,000 on my house and it's worth 800 grand. I've got $500,000 of my money. I got this $300,000 first,
Right.
sitting at 3.5. My home's now worth 8. I've got 500,000 and I can't touch it because there's no chance I'm going to do a cash out refi and lose my 3.5% first mortgage.
Right.
There's your crossroads, but there's your opportunity.
Absolutely. And then the last piece of this conversation that I think is also important is at the same time you're seeing all these borrowers locked in, you're seeing the massive amount of tappable equity. You combine that with this slide here, which shows that revolving debt, this is just revolving debt. This doesn't include any other non-mortgage related debt. This is just revolving debt. We've exceeded $1 trillion recently. This is a record high level of revolving debt. You could literally wipe away all revolving debt. If you go back to this slide here with the 32 trillion, you could, in one quick swoop, you could get rid of all of it. Now, not all of these borrowers that have this level of debt are homeowners. You can't, they're not, that doesn't, it's not a kind of fair comparison, but a massive opportunity in front of people that have seen their levels of debt rise. So, the story really is, it's, COVID money came and COVID money has gone out, and homeowners now have run through the COVID relief funds that have been provided. We're starting to see levels of savings drop and levels of debt rise. And this is an opportunity for you as loan officers to create value for your customers. And so this is another piece of the story that we like to tell is we're talking about why do seconds now. So some of you think about it and you say, well, I don't want to do a $100,000 second lien. I don't make enough money. And what I'm going to suggest, and Dan and I are going to suggest to you today, is that don't think about it as a $100,000 loan. Think about it as creating value for your customer. And if you create value for your customer today, they're going to remember you the next time they have a friend or the next time they need to get another mortgage down the road.
Lastly, that graph is daunting. Yeah. And you're right. That's not all homeowners. There's other folks that don't own homes. Remember, John, there's other debts, right? There's other debts that are massive that are out there. What you can do by using your equity and freeing up some cash position is not just about revolving debt. We all know about auto loans. We know about student loans. And then we have life events that we need to handle.
That's right.
Opportunity.
Yep. And that leads absolutely right into this next slide, which is what are you accessing the funds for? How are you going to put that money to work? Do you have things in your life that you're trying to, problems that you're trying to solve? This is what non-agency is all about, is creating solutions for borrowers to solve problems. So what is it that you need to do? And here's just a list. And these are obviously things that but certainly ways that we think that you can use the second lien product to help grow your business and solve problems for your clients. Okay, so that's just a few minutes on why we think it's an important time to be talking about second liens. So now the question is, how do you start generating volume? How do you start getting in front of your clients? And before we get into the specifics, I guess what I would say to each one of you, and we have this conversation a lot, is start with wherever you're comfortable. Start with where you are today. If you're in the business of doing social media, I can't tell you, I'm a YouTube Shorts kind of guy. I love my YouTube Shorts. And I can't tell you how many times I'm sitting on YouTube Shorts and I come across one and it's somebody talking about home equity lines of credit. It is real. People are talking. So if you're comfortable there, start talking about second lien products in social media. If you're an email customer, if you're doing flyers, if you're calling on realtors, whatever it is that you're doing, make sure you're layering in second lien products to those conversations. Because if you do that, that's the easiest way to start generating more volume for in the second lien business.
It's funny, John, you've got these 6 check marks up here. And if we peel back to just a few years ago, bottom right corner, video scripts, the only thing I was ever comfortable on, I'll be honest with you, right? I got an iPhone. I'm an Apple guy, so I've got my iPhone. And the only time I was ever on video was basically the only way to talk to your kids is to FaceTime them. So I got comfortable with FaceTime. And next thing you know, we live in this situation. We work in a video world now that we're doing these video chats, webinars. And if I scroll through LinkedIn or I'm on a different social media and I see a video, I'm going to click on that because I'm going to spend 30, 45 seconds, a couple of minutes, or a long time, depending upon who's talking, what the content is. And it's normal. It is just part of the daily exercise. The account executives that I know that work on our team here at Newfi that do video scripts, their click rate, if I'm hitting that phrase right, the click rate on their videos, the engagement is more, and it's short, sweet, to the point, and you listen. So I think the biggest differentiator in the summer of 2024, when we need these second mortgages, is explaining who you are and what you're all about using video.
Yeah, no, absolutely. But the one, to be honest with you, Dan, the one thing that we keep talking about, super important, and probably the easiest thing for you to do is this one in the middle on the left. You each, if you've been in the business long enough, each of you have a CRM full of borrowers that were on that previous slide that showed people locked into those interest rates. You have a CRM that's full of those people. That is your best potential client for a home equity line, because they're not going anywhere. They're not, number one, they're not going anywhere. Number two, they've built a ton of equity in their property. And number three, they may need to tap that equity to help to solve a problem.
But that here's number four. You're missing number four.
Yeah.
They love you. If you look at the loan officer or the broker who gave you a 3% mortgage, who helped you get 2.875 30-year fixed.
That's right.
They are so happy they met you. They are so happy that they engaged with you.
Right.
So if you call them back and say, hey, remember, I know we did that 2 7/8. Look, we're not here to refinance. Don't do a cash out. Take that great rate you'll have for the rest of your life until you sell that property. But now I've got a solution to help with some of those expenses you may have upcoming by using our home again as a very important leverage tool.
Yeah,
no, you're right on there.
Yeah, it's just sitting right in front of you. So go figure out a way to get in front of each of them. And then I think the other thing that's really important, what we find is it's not dissimilar to the non-QM business. We have clients that focus all their time on non-QM business, and as a result of that those are our best clients. They're the ones that drive non-QM volume. They're consistently closing transactions. The other broker, the other loan officer that we do business with is somebody that uses non-QM as fallout. And we see fewer transactions from those people because they're only using it for fallout. They're not out actually marketing these transactions. Well, the same thing happens on second lien products. We have some brokers right now that are focusing their entire attention on developing second lien business. And as a result of that, they're seeing an increase in their total income for 2024 up by somewhere between $50,000 and $100,000 a year, depending on where they're focusing their efforts, depending on how big the second lien is, depending on their market. There's all sorts of things that factor into it. But if you want to grow your income by a certain amount in 2024, 2025, you don't think that the mortgage business is going to grow that much, here is an opportunity for you to increase your total earnings as well. So get in front of those past clients. It's definitely the biggest opportunity that we think exists today. So this is the other thing that is great about Newfi. Our marketing team isn't on here, but they have done an incredible job at putting together a second lien marketing kit for you. So if you're interested in getting a copy of this marketing kit, all you have to do is reach out to us. We're happy to provide this information to you, because if you have success in this area, it means that we're going to have success with you. We only exist to help you close more loans. So we've kind of queued this up for you. There's an email campaign, there's flyers, there's social media posts, all sorts of things that help you get in front of either past customers or new customers down the road. We've already done that work for you. So please, please take the time. Feel free to reach out to each one of us. I think you can see our emails. You can go back to the beginning. The first slide, second slide, I think had our email addresses on it. Happy to get you in touch with our marketing team so we can help you grow your business.
These flyers and these email campaigns
yeah.
are really good. I remember when we first started talking about how do we make these, and if you look at the first draft or the first couple of drafts versus where we are today, it's all because broker feedback, loan officer feedback, realtor feedback, successful AE feedback, ops feedback, underwriting feedback. This is not the first or second or third iteration, but this is a seasoned playbook that has proven to be successful. So for anybody who's out there, like John said, JWise at newfi.com or Dan at newfi.com, we will be more than happy to give this to you and help you and watch you succeed and let us all grow together on this product.
That's right. Yeah, absolutely. Thanks to our marketing team for making that happen. All right, so let's dive in, spend a little more time getting a little bit granular. We're not going to get too deep, but we're going to give you a sense as to some of the products that are available for us, for you, that we can provide. And these, we're going to give you 3 different options. These are all Newfi products. They're each a little bit different. Each provide a little bit different opportunity for you to expand your business, and then one of them exclusive to Newfi only. So Dan, your team does a lot of these Olympic closed-end seconds. When you're talking to your loan officers and the brokers that you're doing business with, how are you outlining this product?
I'm simply summarizing what you and I just talked about 5 or 7 minutes ago, reminding these brokers and these LOs, think about those borrowers that you put into a sub 4% first. Those borrowers are exactly the target audience for this Olympic closed-end second. Primary only. These are full doc W-2, well-qualified borrowers. You got tax returns or W-2s. They have tons of equity. If you look on the right, we talk about CLTVs and FICO scores and loan amounts, but it's that borrower right down the middle of the lane. It's the easy full doc W-2 borrower, has a really low first. 9 out of 10 of them we know are under 6. 9 out of 10 of them are 30-year fixed loans, Fannie Mae loans. They're great. We do go down to you can see a 660 FICO score, but the average FICO scores north of 720. And one of the other pieces I really want to focus on is if you do a loan amount of $250,000 or below, we may not need an appraisal on that. We'll run an AVM, we'll get a PCR, property condition report, sort of like the old drive-by for folks who aren't familiar with a PCR is today. But again, we'll run an AVM, we'll figure out what that AVM comes back at, full doc loan. These are easy to qualify on, easy to close, and on top of it, you can make money on these. That's because we allow you to charge 5% points and fees on these transactions. Loan amounts, as you can see, as low as 75 grand. They go up well north of that 250. But what we're seeing is a lot of these are sitting right at that 200 level because they want to get a high loan amount, stay within inside the CLTV guidelines. These are 20-year fixed rate loans. Rates are in the high 8s, and you're going to have a really happy, satisfied borrower. That's really what we're talking about on this one.
Yep, exactly. So this product, this Olympic product is priced incredibly well for that good, clean borrower. Full, like Dan said, full doc, right down the middle. It's for your CRM full of these low rate borrowers. That's exactly what this product is for. And this is our dominant product. It's where we spend most of our time. Most of these are getting done with an AVM. So you don't have, most of them do not require an appraisal. So Dan said 250 and below and HPML compliant. You if the AVM supports the value, you don't need to get a full appraisal. And Dan's right. These loans are high. The loan amounts are higher than you realize. Obviously, it depends on your location. Certainly on the coast, we're seeing loan amounts up average just under 200. If you kind of take the whole country, we're probably $140,000 to $150,000. and you guys can do the math. If you can charge up to 5 points, points and fees on these, you can figure out how easy it is to start earning a living just doing second lien product.
Absolutely. One more thing I do want to point out, because I know you're going to have to hit 2 more subjects and we're running, I don't want to run long on time. These are fixed rate loans. These are one-on-one conversations with brokers. These are one-on-one conversations with borrowers, because the first objection I get 9 out of 10 times is, I want a HELOC. I'm on an equity line. And I remind people that today, we know it's June of 24, prime's sitting at 8.5. And every HELOC is going to have a margin. So we add the margin to the index. The index is prime. So you're at 8.5 today, and that's an adjustable. So your rate is going to fluctuate, but on a HE loan or a closed end second, it's fixed 20 years. 875 is the majority of the loans we do. We have done some at 9, but 875 is almost the equivalent of prime plus 25 basis points.
That's right.
The rate is attractive. The payment is effective, and it's a great solution.
Yep. No, you're right. Matter of fact, one of the things that we're doing with this closed end second on a regular basis is paying off HELOCs for exactly the reason Dan's talking about. So we actually are paying off HELOCs with this closed end second, because you get that fixed payment, you get the fixed rate. And you're going to be saving money on a monthly basis. So definitely an opportunity. It's another window of opportunity for you to reach out to your client base. Hey, do you have a HELOC in place? Maybe I can help lower your payment and put you into a fixed rate payment. So definitely a great opportunity. So again, this is our primary product. There's a lot of easy, good ways to get pricing on this. You can go direct to our website, newfywholesale.com, and you can find our pricing right there on the website. We have a little pricing calculator on our second lien product. You can also find it if you're approved with us and you have access to our portal, which is called Blue. You can get the pricing there. Always find it there. And then we do have our second lien product in lender price as well. So if you happen to be using lender price, I think Arrive is still working on getting the second lien into their system. But as soon as that's done, we'll be able to reflect our pricing in the Arrive system as well. Okay, Dan, you want to kind of go through Acadia at a high level?
Yep, super high level. So we want to be able to provide solutions to all. So again, the majority of the loans we're doing is on that Olympic closed end second, which is for primary residence. Brokers had demands. Brokers said, hey, do you have a solution for non-owner occupied and second homes? So that's why we have Acadia. It is, again, a closed end second going behind an existing first. But what you've got here is non-owner occupied and second homes need some support as well. So this is the same loan. It's for that same borrower, full doc borrower. These are the borrowers that you've done a ton of business on over the last few years. W-2 tax return borrowers, primary and non-owner occupied loans. You can see what our loan amounts are, our CLTVs. Again, it's an easy loan, 50 DTI, just in line with what the majority of our first and second mortgages are. And again, that 660, we'd go into the 660 or higher. But again, this product, like the other, average FICO score north of 700.
Yep. The way I think about it, this is the Olympic is our owner occupied product. Acadia is our second home and investment property product. I do want to go back to Olympic real quick. We do offer that product in Texas. That question comes up all the time. We do not offer Acadia in Texas. So only Olympic primary residence in Texas. There are some restrictions. Texas looks at things a little bit differently than the rest of the world. So if you're interested in that, please reach out to us. We're happy to do it. Okay. Last product we're going to get to today. This is an incredible product that's exclusive to Newfi. It's actually the first new mortgage product in over 30 years, and it's called Equity Choice. And what I've highlighted here on this first screen are the things that should make you interested in this product. So Olympic, coupons in the 8s and 9s. Acadia, probably 9s and 10s. Equity Choice has an interest rate of 4.5% and no monthly payments. That's really all I should say, but there's a little bit more to it. But those are the primary drivers. It's the reason you should be interested. It's the reasons that your client should be interested. When we close these loans, when we go back and ask these borrowers, what was the most important thing to you in making a decision about the equity choice second lien product? The number one thing was no monthly payments. So how do you offer a 4.5% coupon with no monthly payments? And the answer to that question is shared equity. So this is for primary residences only. Loan amounts are very, very similar to what we've talked about before. It's an $85,000 up to 500, and shared equity is 3 times the amount of money you borrow. So if you borrow 5% LTV today against your property, you would owe shared equity of 15% going forward. If the value of your home goes up from the time you close your loan with us, if the value goes up, you would owe Newfi 15% of the future equity in that property. If you borrow 10%, you would owe 30% future equity. But the important thing to understand is, because this is a mortgage, there's a lot of shared equity products that are not mortgages. Most shared equity products, matter of fact, all of them today are equity, are HELOC products. Okay, ours is not. Ours is a mortgage. Because it's a mortgage, it is subject to state compliance laws. Every state has a certain cap on the amount of interest that you can charge on a mortgage. And all of our shared equity is going to be subject to those caps. So wherever you're located, you should be reaching out to us to talk about this equity product. It's a different approval. We handle it a little bit different from a processing standpoint. There are some things that are nuanced to it, but we want to be in discussion with you because we think this is an incredible loan for you to be offering to borrowers that don't want to make that mortgage payment. The one example, Dan, that I love, one of the first loans that we closed on this was actually a realtor. She had 2 kids one was in college, the other one was getting ready to go to college. And what the realtor knew, because of all the things we've talked about today, she knew her income was going to be down over the next couple of years because real estate sales are going to be down. We just know that because of all the lock-in effect that we've seen. Very few people are selling. So she understood that. But she also had these 2 boys that were going to be in college. She had this outlay she knew she was going to have. Well, what she did is she borrowed equity from her house. She used the equity choice product. She got an amount of money that would help put her kids through college, and she has no mortgage payment going forward to offset it. So it is a great transaction. If you're thinking about adding an ADU to your property, or you have a borrower that's thinking about adding an ADU, you're thinking about adding solar, all these things cost money. And so this product here allows you to borrow the money to do those things with no offset to the mortgage payment. So you build an ADU in your backyard and you have rental income coming in. Normally you'd have some PITI that you'd have to offset because you borrowed money to build it. In this particular case, you borrow the money to build it. You have no mortgage payment to offset it. Lots of really cool things.
And John, this is right here. This program, this product is a testament to having ownership by the 3rd largest private equity firm in the world. That's right. Having a partner allows us, and an owner allows us to have products and build and create solutions for borrowers today and solutions for brokers and loan officers during a really tough market. So
that's right.
And
that's right.
Call us to learn more about this.
Absolutely. So thank you for taking the time to spend with us today. I know a lot of you know Newfi already. We do a lot of business with Arrive brokers and Arrive AIME brokers and AIME loan officers, and we're thrilled to be a part of the AIME community. There's a lot of different reasons we think you should be doing business with Newfi. We've talked about a lot of them today. So really, we just wanted to say thank you for taking the time, and we hope that what we've talked to you today about helps you grow your business, because we know when you grow your business, when you're able to say yes to more borrowers, we win as well. And we appreciate and value each one of the relationships that we have with our partners. So thank you for your time today. And we hope that you make a choice, if you're not doing business with us, that we can change that today. So please reach out to Dan or myself, jwise@newfi.com or dan@newfi.com, or you can email I would email Dan or myself, to be honest. Thanks very much. Great to be with everybody today. Have a great
Thank
day.
you all.